Hello, and welcome to the EisnerAmper Engaging Alternatives podcast series. I'm your host, Elana Margulies-Snyderman, and with me today is John Kiser, President and CEO of 5 States Energy Company, a Dallas-based private investment firm which manages a closed-end fund that invests in small, undervalued oil and natural gas properties in the U.S. Today, John will share with us his outlook for investing in small, undervalued oil and natural gas properties, including the greatest opportunities, challenges, and more. Before we dive into the conversation with John, don't forget to hit that like button and subscribe to EisnerAmper wherever you listen to your podcasts. And you can also find us on YouTube at EisnerAmper. Hi, John. Thank you so much for being with me today.
Yeah, thanks for having me, Elana.
Absolutely. So to kick off the conversation, tell us a little about yourself, your firm, and how you got to where you are today.
Well, about me, I have a very diverse background, but almost all of it sort of hovers around energy and engineering. And so I was a graduate of Texas A&M in petroleum engineering and then have an MBA from SMU. But I spent nearly 20 years with Exxon in oil and gas operations with Exxon, and then with Mobil separately before they merged. And then finally with a small exploration and production company called LICO Energy in Dallas. LICO is known for having really discovered the horizontal drilling play up in the Bakken. And so we sold LICO in 2006. And then after that, I got into higher education. I was the Associate Dean of Engineering and an Executive Director of an academic center at SMU, and did that for quite some time. Then in 2015, I left higher education to run a research venture that was focused on converting municipal waste plastic back into fuels. It was a fascinating time, but unfortunately we couldn't make it economic. We were scientifically very progressive, but we simply couldn't make an economic venture out of it. So I wound that down in 2019, and then shortly thereafter joined 5 States, where I've been for 5 years.
At EisnerAmper, we are creative problem solvers that take a 360-degree approach focusing on you. We're an award-winning firm with decades of experience. EisnerAmper, let's get you ready.
John, loved hearing your journey. Given your focus on oil and natural gas investing in properties in the U.S., I would love to hear your high-level overall outlook for the space.
Elana, but maybe before I go into that in detail, let me do some clarifying on what exactly is the space. The industry is very sophisticated and very, very large. And so the space is, when you talk about oil and gas, is really split up into 3 main components. The first one is upstream, okay? And this is where exploration and production gets done, where we find oil, we drill for oil, we recover it, and then produce it. And when you see pictures of drilling rigs or pumping units in West Texas or drilling platforms offshore, that is all kind of what's considered upstream. Another sector is downstream, and that is refining. And you're familiar perhaps with refinings or pictures of refining. But this is where oil refineries take crude oil on the front end, and they convert it into all the products that we use on a day-to-day basis. So gasoline and diesel fuel, airplane fuel. You also see things like industrial lubricants, even some medical and food grade products. Oils come from crude oil. And so those all get done. And really the end point for the downstream part of our sector is retail. It's when those products hit the gas station or the factory floor or the retail, the shelves in stores. In between upstream and downstream, we have what's called midstream. And as you might expect, midstream, there are 2 primary things that go on here. First is in natural gas. It also comes from oil. It's very unclean, has a lot of properties to it, but the processing goes on in the midstream sector. And so they will split out the natural gas to create the clean gas that you're familiar with in cooking or in heating, but it'll also create a lot of the other things. So methanes, butanes, ethanes, those sort of things that are used in industrial gases. But the most important thing really is a product called methanol. And so methanol is a fundamental building block for the petrochemical industry, and from it comes all sorts of things. That's where, again, you're going to get some food grade and medical grade oils You're going to get a lot of those oils go into things like makeup and perfume and lotions. You're going to get all of your plastics come from the petrochemical industry. You also get things like synthetic fabrics. And so I can certainly promise 100% that all of your listeners right now, if they're listening to a podcast, are using some products that came from the oil and gas industry. Chances are they're wearing some of them too, and maybe even have eaten some of them. And so it's a very, very large industry. The second part of midstream is the transportation. So all of the oil and gas fields that you hear about are either in remote areas of the country or offshore. Yet all of the refineries are near the population centers on the east and west coast, Gulf Coast, and upper Midwest. And so there's the transportation of crude or gas from the field to the refineries is a very large part of the midstream business. And the U.S. has about 2.5 million miles of pipelines, but that may be surprising to people. The reason you don't think about the midstream business too much is because of all these lines are buried, so they're all underground. So as far as the outlook goes, the industry really is thriving. And as I read a report yesterday from the Energy Information Agency, we set another record last year, after setting a record the prior year for the amount of oil and gas that's produced. And right now, oil and gas makes up about 75% of the energy demand in the country still. And so it's thriving.
Great. John, as a follow-up, could you touch upon some of the specific greatest opportunities you see and why?
As I mentioned, the midstream sector is going to be probably where the best opportunities are now. There are two things really driving the need for natural gas. And that is the data centers that I mentioned. All the data centers and the power plants that support them are mostly gas fired, and there are some solar coming online too. But most of those are gas fired, and they need that gas to get to those locations. And so there's a lot of pipeline projects right now being built. The second one is that your listeners may be aware of the LNG explosion that's going on. And so there are about a dozen terminals now located in the Gulf Coast that are exporting natural gas. That is expected to grow by about 40% in the next just few years. And so there's an enormous need to get natural gas from where it is down to the Gulf Coast. So that's going to be probably the biggest opportunity for investors right now is in the midstream sector. Having said that, there are a lot of companies like us that are in the upstream sector, and oil wells and natural gas wells are still getting drilled, and they're quite prolific. And so, especially with natural gas, we're seeing some really nice price improvement that is helping those assets become very valuable.
John, on the other hand, I'd love for you to touch upon some of the greatest challenges you see in your investing space and why.
So there are really two primary challenges, I'll say. One of them is not new. We happened to get a lot of social headwinds from oil and gas, and we're really living in a kind of an important place right now. One where we absolutely need the oil and gas products to really enjoy life the way we know it, but at the same time, we are an industry that is, likely has some responsibility for climate change, right? And we happen to live in the intersection of where both those things can be true, and so that's an ongoing challenge. But aside from that, where it really sort of manifests itself is that we are seeing fewer students, for example, that are studying geology or petroleum engineering or entering in our business, and it's a fantastic business. And so that's kind of a real life occurrence of the social headwinds that we're getting. I'd say the second one is what is bothering probably every industry, and that's tariffs. Okay, and so the tariffs really themselves are an issue, but it's really the uncertainty around the tariffs that are the biggest problem. Because when there are tariffs, when there's uncertainty, companies tend to withdraw. They don't spend a lot of capital. They won't take the risks associated with that. They'll turn their attention then really internally and look at ways to control costs. And I might add that EisnerAmper is really in a kind of an interesting position because one of the costs that we all need to control is the cost of capital. And EisnerAmper being in a position to look at our accounting and the financial aspects of a business, really puts them in a catbird seat to help companies control capital. So it would be a good thing for the people to be doing is calling you guys. So anyway, I'd say those are the two biggest challenges right now. Obviously, we always want oil prices to get higher, but we'll live through those cycles.
John, we've covered a lot of ground today and wanted to see if you have any final thoughts you would like to share with us.
Yeah, I would like to say that. A couple things. One, I didn't touch a whole lot on exactly what our company does, but we have been in the business for 40 years, and we have been able to identify very undervalued oil and gas properties, assemble those into funds, and that has been very lucrative for us and for our clients. I would encourage people to think about that. And then, and maybe kind of in that same vein, I'll leave you with kind of an anecdote. If you think about it, a lot of us are guilty of walking by that picture in our hall that we hung there a long time ago, or that painting that we bought years ago, and we ignore it, and we don't stop and take a look at it as something that is really pretty. But oil and gas is kind of the same way. If you think about it, our industry makes the products that we've all gotten so used to for so long, that perhaps a long time ago we stopped thinking about it as a really good investment opportunity. But I would suggest people rethink that. It is a very, very good opportunity. And so when you go home tonight, look at that picture that you hung and remember how much you like it and why you got it in the first place. But the next time you're thinking about investing, consider oil and gas. And if 5 states can be of help, we'd love to talk to you.
John, I wanted to thank you so much for sharing your perspective with our listeners.
You're welcome. Thanks, Elana.
And thank you for listening to the EisnerAmper podcast series. Visit EisnerAmper.com for more information on this and a host of other topics. And join us for our next EisnerAmper podcast when we get down to business.